Working capital loan can be in at least 6 or 7 types. Cash credit, bank overdrafts, working capital loans, bill discounting, trade credit, bank guarantee, letters of credit, and factoring. I can explain all these if someone is interested. I can.
Yeah. Okay. Just explain. Everybody is aware of most of them except bill discounting and factoring.
Yeah, bill discounting. Bill discounting is, I'll just explain in brief. Bank credit, overdraft, working capital loan, you know. Bill discounting is like you are holding a bill which you have raised on a buyer, and he is ready to pay you after 120 days, generally 90 days or 120 days. He requires credit. No, 60 days, 90 days. But you can't wait for that because you need to buy your raw materials, you need to buy your inputs, you have to pay your bills. So you need money immediately. So what you do, you go to your own bank or any other bank and you show them the bill that I have a bill for 5 lakh rupees, which I'm not getting, but I can get it. I have supplied the product and I will get the money after 30 days or 60 days. So what the bank will do, it will give you your 5 lakh, but it will take a cut of that in by way of discount or interest. So it will give you 4 lakh 50,000 or 4 lakh, maybe 4 lakh 80,000. Some amount it is going to take.
Yeah,
so
correct.
that is called this. So
Correct.
your main aim is to get money in hand so that your operations can continue, right?
The very good idea because it improves the liquidity and that small, क्या बोलते हैं, cut you that entrepreneur has to bear is well worth it. Correct. Okay. Now, what about factoring?
Factoring is more or less like bill discounting only. Factoring is a little improved version of bill discounting. So you have factoring, which means there is a product in your hand, which is like a factor, and that again is discounted. So it will require a little explanation.
Okay. Then we will be covering.
It's again a kind of a working capital loan only. Again, it is discounted. Yeah.
Okay. No issues. What are the major sources of finance for MSCs? This also we have covered, but just
I already covered. Yeah, banks, Government of India, state governments, then of course Bombay Stock Exchange, MSME exchange if you are good enough to get equity. So these are the sources of finance. You start with first family and friends, and then you go to bank, then you go to non-bank finance companies, NBFCs.
Correct.
Yeah, because there are these, people like, Mahindra Finance or Tata Finance.
Bajaj Finance.
They help their own, they Bajaj Finance. They help their own sellers,
Yes.
ancillaries.
Okay. What are the procedures to be adopted before applying for finance from these sources?
Yeah, these procedures, of course, nobody is going to give you money without knowing who you are.
That is but obvious because they are also looking for the return safety.
So the first thing you have to do is you have to get yourself registered. If you are an MSME, you have to get yourself registered on Udyam. Udyam is what used to be Udyog Aadhar. So now Udyam is a more detailed application. It can be done online. There are videos also on YouTube how to, register yourself on Udyam. You will get an Udyam number, and that will help you to approach a bank or approach any entity for finance as well as non-finance problems. Then, of course, then you have to go to Startup India if you are a startup and register yourself on Startup India. That is also an online procedure for startups. But you have to have a GST number for registration. Not on Startup India. On Udyam, you need a GST number, whether you are in services or manufacturing. Then, if you want finance and if you are a startup, then you have to register on DPIIT, Department of Industrial Policy, Ministry of Commerce and Industry. Then, of course, you have to, after you have registered yourself, you have to do your own work. As I said, you have to prepare your business plan. You have to prepare your growth plan if you're an existing industry. So business plan requires knowing your market, knowing the share of your product in your market, knowing whether you want to go regional or whether you want to go national or whether you want to only restrict to local market. Then you have to work out your market share. On that basis, you have to work out your revenue, how much revenue, what is your business model. You have to do that. You have to make a business plan. Then you'll have to pitch the business plan. And after that, only you will get finance. So these are the initial procedures, right? I think anybody who has been industry will
Correct,
know about.
correct. He also needs to give some quite a detailed explanation of the business model, for which I've been, I
Yeah,
have a whole this thing which I will cover
yeah,
later. Yes, yes, yes.
yeah,
So yes, so basically, obviously, some very realistic projections have to be given. It's
yeah,
possible
yeah,
based on.
yeah. Because you must know your cash flow, no?
Yes, yes. And all this, when the entrepreneur does all this, it is not just complying with the formality. When he do all this, he or she will, they will automatically a lot of clarity will come, regarding their business. So I think it should will
Yeah,
be
yeah.
that way.
He will himself benefit. When
Yes.
all the parts of the business plan are
Uh,
filled up, he
uh,
knows, oh, is this what is this the cost? Is this the subsidy I can get? Is this the loan I can get? So when he starts exploring,
mm,
his costs, he
mm.
will probably able to take care of some of his costs by way of subsidy from the government. No? So
Yes,
by
yes.
that way, his cost is reduced.
Correct, correct. And also then he starts thinking on those lines, and that itself will, bring up
Yeah, yeah, yeah.
better.
So he can plug whatever loopholes are there with the
Yes,
help
yes,
of
yes, yes, yes,
government.
yes, yes. Very good, very essential. Yeah, this is a common, you can say a statement given by many entrepreneurs. Observed that many
Mhm.
times a request of MSEs for financial assistance is turned down by the bank. What do you think
Yeah.
is the main reason behind this?
You tell me the reason is very obvious. Many companies take loans without ever, intentions of repaying. And that is one
Yeah,
major reason. Banks are
unfortunately,
also,
the
yeah,
bank.
unfortunately, that is the reputation that they've created for themselves.
Correct.
Again, of course, that is now dying because there are so many stringent, you have to have you can be traced anywhere nowadays. If you
Yes, yes.
don't pay, you can be traced by the bank. So your Aadhaar card, your bank account and everything is there. So they can trace you. So you can't get away with it. But at the same time, the main problem is collaterals. If you can't give enough collaterals, because see, they give you money for your machinery. Machinery is hypothecated to the bank. If the bank takes away your machinery, your operation will stop and you won't be able to pay anything.
Yes.
So they need equivalent collaterals. If they're giving you a loan of 10 lakh, they need fixed deposits.
Mm.
Fixed deposit of 10 lakh. So many MSCs, if I had 10 lakh in fixed deposit, I would put it in my business. But
Mm.
no, you
Mm.
are working with the finance from bank. So
Mm.
you need to keep your saving safe.
Mm.
Nobody is going to take away your fixed deposit. If you
That is
don't
only in
repay,
the
then
event of you not fulfilling your obligation. Correct. Yeah.
yeah, only in the event if you don't fulfill your EMIs. Okay. So there is a lot of possibility of your loan becoming in NPA. NPA is non-performing asset, and
Okay.
banks
Okay.
get into trouble if their NPAs keep on rising. Banks
Yes.
get
Yes.
into
Yes.
trouble
Yeah. They
because
are
they are
like
questioned.
held
So they
accountable
have
to
then they
RBI and
have to
all that.
make provision of the capital, and for that there is always an aversion to finance the micro units, finance
Mm.
the women entrepreneurs कि भाई ये तो पे करेगा नहीं. So
Mm.
these are the reservations which banks have. Another problem with the small scale industry and micro industries that their documents are not in order. The
Yeah. Yeah. That is
environment
also
clearance is
quite.
not there. The
Yeah.
land holding, the building, leasehold.
Mm.
So there are a lot of problems with their financial documents. A
Mm.
lot of problems with their holding, land holding or whatever where the factory is. Then
Mm.
they don't follow all the environmental protection rules and regulations. So there are
Correct.
many regulations which they are not complying with,
Mm.
and for that reason, the banks are a little averse. Large banks
Yes.
are a little averse. And then, of course, they try to get collaterals. Because if that plant gets into a problem because of effluent or environment or sustainability or because of, some social impact, then they will stop manufacturing. When they stop manufacturing, the bank will not get its loan back. No?
Yes. Yes.
And
We
therefore,
also
there is
have
a
to
mistrust.
understand and appreciate their point of view also. Yes. Correct.
Yeah.
But just there is a possibility that non loans can be on non collateral. I don't want to go into the detail, but just I heard about it.
Yeah. Yes, yes. There are schemes where micro units are given collateral free loans as a special fund called Credit Guarantee Trust Fund for Micro and Small Enterprise. This is not medium. Has already been set up long back. SIDBI was the starting point for that. And then SIDBI gives funding to banks, and banks in turn guarantee that in case there is a default, then you will be able to get your money back from the trust. So the bank pays from the trust, but the bank will take some kind of guarantee fee. So that is a scheme which has been working quite well. And it is a scheme for small scale units, which, up to at least 2 crore turnover, these small scale units can, the MSEs can get, collateral free loan under that.
Yeah,
even the
2 crore
startups
is also not a very small figure. It's quite a decent figure.
Yeah, it's a fairly big amount. So the government, but of course, your entire default amount will not be given. It covers only 80% or 50% depending on the turnover.
Yes.
But that scheme has to be explained. So
what is the importance of a business plan, growth plan for your business? I think we covered that.
I think we've covered that, to get yourself to know your project, get yourself to know your cost, get yourself to know your cash flows and your revenue. And project it for next 5 to 10 years. Correct. So that when you project it, you know that after 5 years, whether you're going to break even or not. Break even point has to be worked out. So whether you're going to break even, at what stage you are going to break even. That is also important, right?
Yeah, so I think, yes, it will not only, it is not only essential from the bank funding you, but it also is essential for giving the clarity to the entrepreneur and plan.
He will learn a lot. He will learn a lot. And those who are already in business can make a growth plan. So he has been in business for 5 years and he wants to set up a new company, or he prefers to stay in the same company. Then, of course, he has to expand. And once he wants to expand, suppose he wants to expand in 2022, then he has to make a growth plan for next 5 years or 7 years. And he will see how that project will take and whether it will start generating revenue in the 7th year or in the 5th year or in the 3rd year, and that much capacity. He has to set up and expand that much capacity.
Yes. All that ROI and all that. Okay.